Welcome viewers. Our today's topic is absorption of company. This topic is divided in three parts. Out of that, we are covering today the part 1. The absorption of company. The concept of absorption of company, the process of absorption of company, then the calculation of goodwill or capital reserve, the methods of calculation of purchase consideration will be the scope of our today's lecture. Let us start. See, you can see there the meaning of absorption of company. In very simple words, I have explained here. Basically, in absorption of company case, there are two companies minimum. One existing company purchases the business of another company. Means a company which is absorbed by the existing company is called as a purchasing company, and the company which is absorbed is a vendor company. Means there is a purchasing company and there is a selling company. So in the transaction of sale purchase of the business, there is a consideration. A purchasing company pays the consideration to vendor company, and that is called as the purchase consideration. Means one company is selling its business, its corporate life is coming to an end. That is, the life of vendor company comes to an end in case of absorption of company. Now go ahead. See, I have given you the example. It will clear you the concept of absorption of company. There are three companies which are in existence, the company A, B and C. Now what happens? C wants to become more powerful. That's why C gives the offer to A and B to sell their business to him. Means what? C wants to purchase the business of A and B. When A and B accepts the offer, yes, they are ready to sell their business, right? Then what will do? The C will pay the purchase consideration to A and B, and in response to that, C will have the business of A and B. Means the life of A and B will come to an end. Means the A and B company will be absorbed by the C company. This is the process of purchase consideration. And if the A and B is purchased by C, in response to that, in return to that, C will pay the price called as the purchase price, or alternatively it is called as purchase consideration. Now the purpose or the motives behind the absorption of company. There are various motives, but let us see the important one. Of course, we have seen in the previous slide that existing companies are there. Maybe they are doing the similar kind of business. Means one of them wants to minimize the competition. So to have the advantage of reducing the competition, absorption takes place. Then when the sources or the resources of two companies are merged together, it gives the large scale economic benefits. The uniform policies can be formed, and when the competition is reduced, it reduces the marketing cost of the existing company. Indirectly, there is the monopoly for existing company by absorbing the competitor company. There are certain demerits also along with the merits. One of the major demerit is that there may be the fear of overcapitalization. Means when the parties to the absorption, the purchasing company has to take care that overcapitalization should be avoided. The increase in price is possible. Absorption process, the cost involved will lead to in the expenditure or rise in the price of the company. Then sometimes it is a lengthy process. It involves there the obstacle hindrance for the growth of the company, and the company which is being absorbed, the employees of that companies, the workers of that companies, the personnel of the companies, they take time to mug up with the new equipment of the new company. Now exactly the process of absorption involves the below steps. which I have given on the slide. You can see there the step by step process is given. These steps are very simple. The first one is that the purchasing company and the vendor company decides the prices of the asset and liabilities. At what price the purchasing company will take the assets and liabilities. Then from the total assets, the total liabilities are subtracted as per the agreed prices. Vendor company handovers the assets to the purchasing company, as the purchasing company takes over all the assets as well as the liabilities. That's why the assets, from the total assets, the liabilities are subtracted. Then for that net worth, for that net asset equal to that, the consideration is paid by the purchasing company, right? It is paid to the vendor company. This is the simple process of absorption of the company. And what happens? This consideration is paid in combination of maybe sometime the equity shares of the purchasing company, the debentures of the purchasing company, or partly in the form of cash, or the combination of all these 2 or 3 is there. It depends on the agreement of their absorption. Now, what accounts are involved in the process of absorption of company? As I already told you earlier, that before understanding the accounting entries, we have to understand the theory. The theory covers the type of account involved. There are 4 main types of accounts which are being prepared in the books of vendor company. Why? Because vendor company has to close down their books and the life of the vendor company comes to an end in case of absorption of company. So, the first account is open in the vendor company accounts, that is realization account. Then the second one account is the account of purchasing company. Third one is the bank account, and the fourth one is the shareholders account. Now, the methods of purchase consideration which are involved in the process of absorption. One of the first method is lump sum method. Yes, here purchasing company pays the lump sum amount as a consideration for purchase of business to the vendor company. Then the second method is there, net asset method, wherein the total assets are taken there as per the agreed values and the liabilities taken over by the purchasing company are subtracted. So, net assets are arrived and equal to that net asset, the price is paid to the vendor company or the shareholder of the vendor company. Third method is there, net payment method. What is there? What type of payments are given by the purchasing company are given there. Say for example, payment to shareholders, payment to debenture holders, payment to creditors of the absorbed company. It is called as the net payment method. Then, as already we have discussed, the consideration may be the combination of cash, debentures or shares. Now see, one of the important issue associated with the absorption of the company. What are those? That is the goodwill or capital reserve. There is occurrence of goodwill when the purchase consideration paid by purchasing company is more than the net asset acquired by him. In that case, from the point of view of the purchasing company, the excess amount beyond the net asset paid by it is called as the goodwill. It shows in its books that amount as a goodwill, and the contrary, vice versa. When purchase consideration paid is less and in response to that, in exchange to that, in consideration to that, the asset acquired, the value of the asset acquired is more. The value of the asset exceed by that amount compared to the purchase consideration, that exceed portion is called as the capital reserve and it is denoted in the books of purchasing company. Thank you friends, this was the basic theory regarding the absorption of company. We will see in our next part the entries in the books of purchasing company as well as in the books of vendor company how to close down the books.